Mackenzie in the waiting room yet, but for the sake of everyone's time, I will begin. We don't have Adam with us yet, but I wanted to thank everybody for taking the time to be with us today. I know everyone has 1,001 Zoom calls these days, but wanted to put together this group of professionals just to bring forward to you information that we have as it gets sort of disseminated to each of us within our individual professions, to cut out the noise of what's going on in the media and how they like to sort of flash the headlines and not actually provide the content or the meat of what you need to know. So who we've assembled today is Bronwyn Bertles. She's a realtor with the Next Door group at Engel Völkers in Yaletown. We've got Doug Lucas, who is a home inspector with Better Home Inspections. We have Adam Lawrenson. He is owner and appraiser. There he is coming in to the waiting room now. Adam, just introducing you. So Adam Lawrenson, owner and appraiser with Adlaw Appraisals. And myself, Katy Mackenzie, with TMG The Mortgage Group, mortgage broker. So what we had intended for the session is for each of us to just give a little bit of background as to who we are, why we should be in front of you and take your time from you today, where we were 3 weeks ago, 4 weeks ago, where we are today. And of course, anything we say, if anyone is recording our call, could change in the next hour, 2 hours, 3 hours, days from now. So please hold it with a grain of salt. So what I'll do, I'll put everyone on mute just so we don't hear any background noise. And I'll actually start. Normally, I like to say you want to start with the financing conversation as it relates to real estate. But today, I'm going to actually throw it first to Bronwyn. She'll give us about 10 minutes. If you have any questions, feel free to put the questions in the chat box. And as soon as Bronwyn's done, then I can give her or prompt her the questions that are being asked. And then we'll have an opportunity just for an open conversation at the very end after everybody has had their time to speak. So Bronwyn, I'll turn it over to you.
Hi, nice to meet you guys virtually. This has been a fun way to do things because in real estate, typically it's a lot of face-to-face. So this is nice change for us. But I work with a team, a top producing team. If you're into credentials, we have one medallion, which is top 10% of realtors in the greater Vancouver board for as long as I've been part of the team. It basically means that we get to touch a lot of buyers and a lot of sellers. And the more touch points you have with more people means that you really have your kind of eyes and ears on the ground of what's happening in buyer and sellers' minds. So my team, there's 5 of us realtors. We focus mostly on Vancouver. We will go into the Tri-Cities, Burnaby, and then we do have a specialist on the North Shore as well. Engel Völkers is a more boutique brand out of originally Germany, but in North America, we've taken over a lot of the market share, but kept it to kind of an elite group, meaning that just because you have your real estate license, doesn't mean you can just join our brokerage. You do need to be qualified, and with that, we get a ton of training, a ton of hands-on. It's smaller, so we get a lot of one-to-ones with our brokers. But all that means for you is that you've got great realtors working with our brand. You've got international exposure if you are a seller. And because we're kind of smaller and can move easily with changes, we've been able to adapt to this pretty quickly as a brokerage. So yeah, I mean, that's kind of the best way to explain us, and I can get into more detail me personally, but I think that's not what you guys are here for. It's what's happening in the real estate in Vancouver right now. So we are deemed an essential service. We have, I can only really speak to what our brokerage has kind of implemented and what I've seen, but basically we told a lot of our clients to kind of just hold tight right now, just to take the foot off the pedal, unless they're in an urgent situation. So I had one client who had already sold their property and was going to purchase. They've decided to go into the rental market just to see how the market kind of takes this play out. So we can still do, if anybody is in kind of a desperate situation, I don't mean desperate, but just they need to buy or they need to sell right away, we're still helping them, but we're taking a lot of precautions. So those precautions are kind of a strict questionnaire before letting anybody into a property. So have you traveled? Have you been with somebody who's traveled? And we actually have a waiver form that we like to sign. This way, I mean, you can lie if you're going to lie, but at least we've got you kind of trying to answer those questions, be valid, and signing off when we let a buyer into our property. There's no more open houses as of right now. It's only private showings in kind of 15-minute or 30-minute increments, depending on the product. And with that, we also kind of have as much as we can in terms of safety. So Lysol wipes, gloves, masks, and shoe covers if people want to leave their shoes on. Typically, what we've asked sellers to do is to leave all of the lights on, all of the cupboards or some of the cupboards that are important open. And then we've actually asked buyers not to even touch anything. So all the doors are kind of open, so nobody needs to be touching anything. And with masks on, that should alleviate most of what's put into the air. So for the most part, that's what's happening when people want to go see properties. And that's happening on the flip side when we want to show properties. On top of that, we are doing things like virtual tours. All of our new listings coming to market are getting more photos. Matterport, which is sort of like a 3D walkthrough of the home. It can be a little bit dizzy if you look at it on your phone. It's best on a desktop, but at least it gives people a real good sense of the property. So what we're seeing for sellers is, you're not going to have 50 people through in an open house. You might only get kind of 10 calls. Of those 10 calls, maybe only 8 come through, but they're going to be pre-qualified, ready to go buyers. And that, of course, is to keep everybody safe. And that's like our first concern right now, especially elderly or anybody that has the conditions that could hurt or could be more susceptible to being kind of longer term damage of this disease or of this virus, pardon me. So yeah, in terms of the market, of course, we've seen the stats actually just came out this morning. So we have seen a decrease in the amount of sales for March, which is pretty standard. March, one of the things that I would warn most people about is that typically when the media is posting about stats, they're looking at last year compared to this year or last month compared to this month. But 2019 was a shake-up year. It was very uncommon. So even though it's going to say, stats are down from last year, well, last year was a benchmark bad year. So I always tend to look at the 10-year average and also how many sales we have compared to how many listings we have. Because although sales are down, listings are also down substantially. Typically, any sort of a slowdown in the market is going to eventually lead to a slowdown or a lowering of prices. It's really hard to predict what's going to happen, but I think it's something that it's a wait and see. It's what's happening in your situation dependent, what you should be doing. There's always an opportunity in the market, so it's figuring that out. And I guess it depends on how long we're out of the companies can't hold jobs or how many close, because unemployment rate does directly affect real estate prices. Is that kind of what you're looking for in terms of questions? Can I answer anything else? I actually will bring one thing up. We're seeing people who have kind of a rental portfolio. We've gotten a few of those who have called to say, I'd like to sell my rented or tenanted property. Right now, that is a big question mark because we cannot give evictions currently. unless it's a really specific circumstance, which most people don't apply to, and we don't know how long that will apply. So if you are buying or selling a tenanted property right now, there's a lot of question marks, and you've got to, it's going to make finding that right buyer even a little bit more tricky.
And harder to finance because then it's tenanted.
Yeah.
So someone has to purchase it as a tenanted property.
Yeah. Any questions, or like, is there anything more you want me to answer? Do you want me to be more specific? I wasn't.
Nobody's put anything in the chat box yet. I think that's the main thing that we needed to know is sort of, you know, what do the open houses look like today? How are people viewing properties? And sort of, you know, the question that nobody can answer about, you know, where will prices travel? So, yeah.
Yeah, so I know that our brokerage has North America headquarters in New York, and we've had actually quite a few Zoom calls with like 300 plus agents on them. And I think the biggest push is that most of the agents, and generally, if you need anything, let us know. If you have just general questions, feel free to call. But the biggest thing is I think that this is going to transform our industry into forcing people, not forcing, but really pushing virtual tours, a lot of what can be done from home, and what can be done about marketing your property for sale. That's going to get a bigger reach without, because I mean, if you look at, if you go onto like MLS right now, or realtor.ca, or your kind of preferred search, there's still agents using iPhone cameras to photograph a home, and that's just no longer going to be accepted. So I think you're going to see more money being poured from the agent side into getting professional photos, professional videos that really show the home, not just highlight the good stuff. Because what we've been kind of focusing on is talking about our properties and making sure people understand, you know, this is south facing, this is when it's going to get the light, but when it might not get light. So kind of a more real presentation of, or representation of, the property online.
Awesome.
Yeah.
Well, if anyone has any questions, something might come up, just feel free to type it into the chat box. We'll have an open Q&A at the end. But if Bronwyn, you're done, we'll move over to Doug. And introducing Doug. Doug Lucas is a home inspector with Better Home Inspections. So Doug, welcome. What have you seen change for home inspections? Obviously, where you were and where you are today. I think we have to unmute Doug. Hold on, let's unmute Doug.
There we go.
There you go, Doug.
Home inspections really haven't changed. The mechanics of them are what people need to know in order to make a good buying decision or an appropriate one for themselves. And so the mechanics actually haven't changed. It's just the care with which the inspection is done for other people's purposes as well as my own safety as well. Typical routines of gloves, Clorox, wipes, masks, cleanup after the inspections, a lot more diligent, and distancing, social distancing. But the mechanics of the home inspections really haven't changed. We need to walk through each and every one of the components to make sure that when the buyer makes that decision, that they're comfortable with it and that they're fully aware of what's going on. And so a lot of what's going on in the home inspection business is the same as it's always been. It's just with a little bit more care and awareness of the current issues. We still go through all of the components, you know, the exterior, the grading, the roof, foundation, the interior, looking at appliances, etc. And it's all with the idea of empowering the buyer to make the best decision for their purposes. And those purposes are something that are not my own. They are theirs, and I'm there to meet their needs. So a lot of home inspectors can be mechanical in nature. They're there to identify issues. For me, I like to deal with people and make them aware so that they're empowered and comfortable. Like, it's $1 million decision typically, and it's pretty important for, especially for first-time home buyers. So the whole pandemic here is something that is, it's definitely slowed down the industry, but we're riding on the backs of the realtors, because when their business slows down, so does mine, and when theirs picks up, so does mine. But really, it's more about personal safety at this stage. I have to operate appliances, and at this point I wear gloves and use Clorox wipes to open cabinet doors, etc. But there's really very little, and I'm afraid I'm not going to be using up my 10 minutes here, because there's not a lot of differentiation in the industry apart from that.
Have you had any strata properties disallow access to areas within?
That is a good point. Thank you, Katie. Boiler rooms, mechanical rooms, they're just off limits. The roof's off limits. Anything that has to do with opening locks and doors and access to the places, yes, they do. And so there are limitations there, and that common areas are closed down as well. If there's windows, I can briefly look at them, but I can't really walk through them and determine any quality standards and stuff. So.
If there is no access within a strata property, are you able to review documents provided by the strata, such as a depreciation report, to give an opinion?
I often do review depreciation reports. I have a construction background, so they're more meaningful to me. So when I read a depreciation report, I can walk through it with an understanding of the language that they're using and the issues that they're striving for to communicate. But having said that, some depreciation reports are better than others. Some depreciation reports just reference the fact that there were no issues reported. They don't give dates on hot water tanks or anything else, and so I am limited, and I have to put those comments in the inspection report suggesting that I'm unable to access those areas and that I can't fully evaluate them. If there are some concerns in those areas, that they need to refer to strata documents or the depreciation report. And that is a good point. Depreciation reports are becoming more popular these days and more valuable in the decision-making process.
And have you had any mandates that have been issued by your licensing associations in regards to, all these changes, or is it just what you've mentioned in terms of protecting yourself as well as the homeowner?
It's pretty common. It's pretty common, for everybody. There's not really anything specific. I know that if you're afraid that your health might be in jeopardy, typically you don't meet the sellers, they're gone, so you don't know their health, their condition, and where they've come and gone from. So you take care no matter who, no matter what property you're going in to evaluate. But and I think that you can do that safely with the safety, mask, gloves, etc. But they are required now.
So I think that's where your key real estate partnerships are paramount, right? You have to be able to trust the individuals that you're working with to say,
yes,
you're safe within the property, take your normal precautions, but
right.
Yeah. Anything else you wanted to add?
That's
any
about
question,
my
any questions from the room? We can of course ask questions as they come up at the end. But if not, if Doug, you're good, we'll move over to Adam, who just swapped his background. Oh, no. And I'll mute back Doug. I'll take Adam off. Adam is owner and operator and appraiser with Adlaw Appraisals. Adam, what have you seen change for you and your teams?
Yeah, hi Katie. Good morning, everyone. It's been a wild ride the last couple of weeks, that's for sure. Everything was kind of business as usual up until March 16th or so. So our appraisers were taking necessary precautions going into homes, gloves, masks, etc., keeping social distance. Now we are doing no interior inspections on properties. So what the Appraisal Institute of Canada has done, and they are our guiding body, they have said that we can do exterior inspections along with photographs or video tours from the homeowner in order to provide a full 360-degree inspection of the property. And that's meeting not only the Appraisal Institute's guidelines, which is most important for us as appraisers, it's also meeting the bank's requirements. So almost all of the banks, except for I think one or two, have approved this modified full appraisal. And so yeah, it's working out wonderfully. So the appraiser will drive to the property vehicle, do an external inspection of the home, taking photos, measurements, even looking through the windows. So we do ask the homeowners to be home, so they're not, wondering what the heck's going on. So our appraisers are actually looking through the windows, making sure that the photos that they provide or the videos that they provide are indicative of the property that they're living in. They have to be geo-tracked, so the photos have the geolocation of where the photo was taken. They are time-stamped, so we know they're not from 2 years ago when the home was in pristine condition. The banks want to see the condition of the property as of the inspection date. And then, yeah, so it's working out perfectly. So we're completing full appraisals like we always have been. And there's a little bit of a time delay in getting the reports completed because sometimes the homeowner might not have access to a camera. It's a little bit technologically unadvanced. And so getting those photos or those videos sometimes can be a challenge. But other than that, we are trucking along nicely. Like Bronwyn referred to earlier, sales volume has slowed down quite a bit in the Greater Vancouver area, Fraser Valley. So we are experiencing a slowdown in sales, but the refinances have picked up quite a bit. And Katy, I know you do lots of those as well for your clients. So we are dealing with a lot of refinances and helping clients, especially if they're in a financial quagmire right now, that they are doing some refinancing, getting a bit of equity out of their home in order to get through these challenging times.
Adam, I've got 2 questions for you. If as we continue on into this pandemic and sales decline, there's less comparables for you to do an analysis of an appraisal with, right? So you look at recent market comparables, adjust for differences in say, size or location, view, so on and so forth. So as those comparables slow or become less and less, what are appraisers doing going forward to have comparable values?
Yeah, this environment where there are a lack of good comparable sales, that's what really makes the appraiser's job valuable, because we are using judgment along with some very kind of subjective or experience-based skills in order to provide that final estimate of value. So if there's no sales, we can do we often use like a cross-sectional approach where we look at a bunch of different metrics in order to come up with a final value. So we will look at the supply of housing. So if there's an ample supply of housing, we know that even if there's no sales, it's going to push the values of those homes down significantly. It's just supply and demand. However, we will try to look, a needle in a haystack, that one sale that does point to the most recent value for the time, and then we will have to time adjust for the sales in February and March. They may have to be adjusted downwards in order to get that value for today. So what we want to do is we want to find some sales that are recent, that are reflective of the current situation, and rely most heavily on those recent sales. And we hope there are some. If there's none, we'll have to take it day by day.
There still are sales going through. I've got clients that bought yesterday, so
there are indeed. So those are the ones we want to look for, and those will tell a very strong story as to what's going to be happening with the market moving forward.
Is there? Oh, sorry, Bronwyn.
On this? Yeah. So just to speak to what you're talking about, it's actually been really interesting because the sales that have been happening, leading up to March 16th or 17th, we'll call it, when kind of everything shut down, we were seeing a huge increase in demand. We were seeing multiple offers again. And so it was a really like vibrant time in the market, and everyone was like, oh, great, 2019's gone, 2020 will be good. But what we're noticing now is that in the few cases that I know, there's actually been multiple offers on some of these properties in the last 2 weeks. But the multiple offers would be like 2, maybe 3 offers, 2 really low balls, 1 reasonable offer looking at data, and then they'd work with that. So I think you've got kind of two people in the market right now, kind of the low ballers, let's see if we can find a deal, or the pessimists, or the people that are like, I see value, I've seen the other sales, maybe I'll take a little bit of a discount, and we're not talking major, but maybe I'll be a little bit more conservative in my offer, but it's coming together. So you'll notice in the stats, it's going to say we had an increase in sales from March of 2019 to this year, but our overall 10-year average is 20% below what we usually have in terms of sales volume. So just be wary of of what the kind of media is picking up on. But yeah, I think there's still sales happening, and there's still people, and typically like 2008 and even after last year, Vancouver does rebound quite quickly. So I don't think that this is going to be a long time. I think this is just going to be a little bit of a blip in kind of what's happening in the market.
Adam, my second question for you is, are there reports where you're offering a range of property value? So where you're doing, say, a drive-by and you're saying it's worth between $950,000 and $1 million?
Mm-hmm. Yeah, so there are options to do limited scope appraisal reports. The two major ones, like you referred to, are drive-by appraisal and a desktop appraisal. And those two appraisals, they're basically done to provide a range of value, and it's usually a conservative range. It doesn't involve an interior inspection of the home. So it's for low risk situations, typically low loan to value mortgages, or even insurance situations as well. And so, for example, say a property sells for $1 million. Well, if we do a full appraisal, we do the exterior, interior, do a full analysis, you're going to probably come up with a value of around $1 million. If it's a drive-by appraisal or desktop, it's going to give a conservative range of value from about $900,000 to $1 million. And what that does is gives the lender a more conservative valuation, a quicker valuation, where they can make a quick decision. But oftentimes for mortgage brokers, if you're doing a 80% loan to value, 75% loan to value, even 70% loan to value, that drive-by appraisal may not be acceptable or may not get the deal done, because the lender will lend on the lower end of that range. So it causes issues. So at Adlaw Appraisals, if anyone tries to order a desktop or drive-by, we give them a quick comment saying, just be aware that this may not satisfy the mortgage that you're trying to do. And what happens is they say, oh no, we want it done quick, we want it done fast, just do a drive-by, do a desktop. And they come back a day later and say, I need to order a full appraisal. And what that does, it slows things down, and it costs everyone more money. So we try to get a full appraisal on every single file.
Yeah. I don't know if you can see in the chat box, Clint Grayson, who's with Home Equity Bank, he's got a question for you. What happens when the client doesn't have a way to take pictures for you inside of the home?
Great question, Clint. Good morning. So Clint's with Home Equity Bank. We do a lot of appraisal work for Home Equity Bank, and their clientele is typically of the older generation, someone that's doing a reverse mortgage. And you know what, that is an issue. We're going to come up against obstacles in this whole pandemic that we're dealing with. And that's one obstacle. So you have an older couple who does not have an iPhone, does not know how to email. And what we need to do is get some assistance for those people. So if they have a family, friend, nephew, neighbor, anyone, it's time for us to all kind of, get together and solve this problem together. And what we need is some support from the homeowner's family, friends, neighbors, to go in and say, hey, can you just help me take, 15 photos of the house and send it to the appraisal company? That's what we need in that case, because like I think Bronwyn alluded to at the beginning, health is number one. And so nothing is worth getting someone sick over an appraisal. So we do not want to enter the home for the homeowner's sake, for our sake. We want to make sure those photos or the video are being provided to us from the homeowner. And I guess that leads to the other question, is that, well, you don't want your neighbors coming in the house either. And this is something that we're just going to have to roll with as we go. We do need those photos to give an exact value of the property. And this could be an opportunity for someone to come up with some sort of solution moving forward. How can we get an accurate video or photographs of a person's house when they don't have the technology to do it themselves.
Mm-hmm.
So I don't think that answers your question, Clint, but it's going to take a village to get through this, and hopefully they can have a family member take photos and send them to us.
Awesome. Thanks, Adam. If anyone has any other questions for Adam, we'll have an open session at the end as well. So thank you, Adam. So I wanted to talk, and not bore you, but talk about some of the mortgage changes. And I've got 4 different things I wanted to speak on. One is payment deferral. Second is rates, both variable and fixed. And the third is purchases where there may have been a loss of employment or income, either permanent or temporary, or where there may have been a loss of down payment because, of course, of market decline in value. And the last one is a mortgage renewals or refinances. So the first one that everyone has obviously been asking about is payment deferral, mortgage payment deferral. So the government announced the program saying, you know, up to 6 months payment deferral from our major lenders. And I will say all of our real estate partners, including our lenders, have been absolutely exceptional during this time. Of course, these payment deferrals were announced and there was no set programs in place. So that very same day, the lenders were inundated with calls. Most have now set up designated landing pages either on their websites or through your online banking portals, which are both easier to actually apply for the payment deferral than trying to get through on the 1-800 call center numbers. It is not for everyone. So if you think you may need it down the road, my recommendation is to not call today. Let those people who might be missing their mortgage payment in a day or two get through first. Lenders are looking for the payment deferrals to be approved on a case-by-case basis. They are looking at primary residence deferral as well as rental deferral. It isn't for everyone. Interest will accrue, so it will extend your overall amortization. But a payment deferral on a mortgage may actually make more sense than living off of a line of credit, because basic math, lines of credit compound monthly, mortgages only semi-annually. So definitely something to speak to your lender about. But again, if you don't need it today, please give the opportunity for those who are going to miss their next mortgage payment the opportunity to get through first. Rates, this is a big one. The media loves to splash when prime lending rate with the Bank of Canada decreases. So it is the one thing that hits the media the most in our industry and causes the most confusion. So yes, the Bank of Canada has decreased their overnight lending rate to a historical low. So anyone with an existing variable rate mortgage or line of credit is now benefiting from this decrease. You will automatically be readjusted to those lower rates. In immediate response, lenders reduced their new variable rate product offering. So where we were seeing prime minus 0.8, 0.9, we started to see prime plus 0.2, 0.3 on variables. And in response to everything going on, the risk, or the basic way of saying this is the risk to lenders to lend new money out significantly increased. Their risk premiums increased. And in response, we had several days in a row where we saw an increase to fixed mortgage rates. Now we're still at historical lows. Does it still make sense to look at your mortgage and whether or not you want to refinance it today? Yes. As Adam said, we're doing a ton of refinances, but they are all taking a lot longer to get through, and the rates are not where they were 2 weeks ago, nor are they where most people expect the fixed rates to be given how low prime lending rate is. Now, the government has announced other additional programs which eventually will ease up the liquidity of financing and lower the risk premium. So we are hoping to see some of these fixed rates slowly shave back down. But that's what's happened there. The third one I wanted to speak to is anyone that has a current contract. So someone that has bought a property but hasn't closed yet. So they may be closing within the next typically 120-day window, or it might be pre-construction, so a little bit longer than that. So clients who have been issued a commitment from the lender, The commitment details and why a lender indicates every single condition to their commitment on the commitment is because each and every one of those must be held until the funding date. So people are worried that if they have lost their job or seen a decrease in their income but haven't yet closed, that they're not going to be able to proceed. What we've seen is the lenders come forward to, in every opportunity, offer a continuance of that commitment. So obviously, if it is something extraordinarily outside of the client's ability and within a certain date range to maintain an income, they are looking to continue those commitments. Where I have seen commitments pulled is typically in the small private lender space. Where money is committed and all of a sudden the risk premiums for those small private lenders are being revoked. So if you know someone that has had compromised income and you know is in a purchase situation, hold allegiance to whomever your existing broker or lender is, but any information that that person provides to them, they have to disclose to the lender. So offer them an opportunity just to have a generic conversation with perhaps another lender or another broker, just to offer a little bit of advice and ensure that commitment continues. Again, we have great lender partnerships. We've seen every single lender from the private space to the B space to the A space on conference calls, the head of each lending institution speaking about how they're mobilizing all of their teams to be able to work from home. They're working 24/7 around the clock to get through the volumes. Everything is taking longer. What we are seeing is that the realtors also know this, so that they're giving more time and more grace for subject removal periods, so that we're able to actually secure the pieces, do the home inspection, complete the appraisal when required, and get the full financing in place for the client. So huge shout out to our lender partners again. And then the fourth thing to speak to is anyone that's coming up for renewal. So you don't want your renewal to get lost in the shuffle of everything else going on. So again, because there is all of these payment deferrals, refinances, because rates are still at historical lows, you don't want your renewal to get lost. So best advice, if you don't know what you're going to do at renewal, it may be your home that you want to sell or might be considering selling. It might be an investment property with the same thing. Maybe you want to reduce your overall investment holdings. If you don't know what you're going to do or what your income may or may not be like, renew into an open term. The lenders do allow this open term. Some have what they call a convertible term, so that you can early renew it into a fixed rate term down the road. It gives you the flexibility of figuring out something at a later date. Open terms are more expensive, but if you're doing it short term to give you opportunity of choice, I highly recommend it. If you are doing a renewal and you typically communicate with your lender via email, this is the best way to do it, because if you are communicating your instructions for renewal, again, like Adam said with the photos, it's dated, it's time-stamped, and a lender can always fix anything if they happen to miss a renewal input. You have the verification via the email that you requested the renewal, the term that you were accepting, so that you have that as validation. If anyone has questions about renewals, obviously people are asking because they're assuming fixed rates are super, super low. You always want to reach out to your existing lender, find out what the options are for renewal, and then see what other options there are in the marketplace to ensure that you're getting yourself into a term that doesn't fit for just now, because under extenuating circumstances, stress and duress, like everyone is under, you tend to think narrow focus and short-term focus. You want to make sure that you're thinking about these renewals how do I say this, as a part of your overall longer-term financial plan. And so a big plug, of course, for mortgage brokers is that we can think of these strategies as a part of that longer-term plan, as opposed to, oh my God, I don't know what I'm going to be doing in 6 months from now. I need to refinance and renew today. So we can help because we are well versed in this, experienced in this. We've seen clients, you know, outside of the current pandemic in all sorts of stress scenarios where you literally get tunnel vision, and you can't think outside of just getting this refinance or renewal done. The last piece then, of course, is refinancing. And I know Clint's on the call as well. So you're obviously looking at people who have had a significant decrease in their investment portfolio. So they may be nearing to retirement. Linda, you probably have clients in this scenario too, where they're looking to downsize, move into retirement. And all of a sudden the investment portfolios that they were looking to draw on have significantly decreased. So there are financing products available to help these people draw equity out of their homes, even on reduced incomes. Again, with this type of product, you are typically looking at anyone 55 and above. But there are those mortgage style products available, and different ways at looking at financing, not just your traditional get a mortgage to buy a home, but you can actually use the mortgage and the equity to leverage. You know, there's all of these opportunities. With the market being low, it's causing a lot of problems, but there are also opportunities and ways to look at it to again try and see some good in all of this that's occurring. So again, refinances are really popular right now. People are doing that because they have stable income, but they're concerned their property value might decrease. Or I have stable income today, but I don't know about 6 months from now. So at every opportunity, if you have someone in your circles that are saying these things, I just invite them to have conversation with somebody. In this current world environment, speak to the mortgage professional about mortgages, you know, speak to the home inspector about the home inspection, the realtor about the realtor, the appraiser about the appraisal. Don't ask your neighbor, your friend, your mom who did it last week. You need to speak to the individual who is experienced, licensed, you know, is in this day-to-day real estate world. To ensure that you're getting the right advice. And as much as you can, and I say this every time I have a conversation with anybody about real estate, is try and ignore the media. They will write a headline like it's a car accident and then provide you no meat and no true information. If they do provide some decent information, it's usually then a blanket. It's not specific to your scenario. So ensure that you're asking the questions that you need. And if you need an introduction to a professional, obviously we have them in the real estate world. Our secondary realm of people that we refer to as it relates to real estate transactions. And of course, I'm born and bred Vancouverite, and I've been lending here for over 20 years. And we guaranteed we know someone in a profession that can help you during this scenario. So I'm just going to check. That's all I wanted to talk about, but we had a couple questions in here. I want to know more about interest rate changes. Do we think there'll be better rates out here for renewals, factoring penalties? So great question. Okay, so this is a question about if you have properties, where rates are, where they're going, and possibly paying penalties to break terms. So I was actually discussing this yesterday with a client. They're maturing in October, and they wanted to know what their penalty was to break their term today, and to decide whether or not they would do that, capitalize that penalty into the mortgage and take a newer, lower rate and secure that today, as opposed to waiting 6 months from now. Now, there is no crystal ball to know where rates will be in 6 months from now. I'm always more conservative. I'm like, if it makes sense and you can protect yourself and know for now to the next 5 years where your payment's going to be, it is the one thing right now that you can actually nail to the wall and say, I don't have to think about this for the next 5. I would recommend doing that and absolutely looking at every single mortgage you have in your portfolio and having it reviewed with your existing lender, broker partner, whomever it is that you work with. Absolutely have those questions. Bronwyn's got a question over to Adam. I'm just gonna
say, it's like I know that you had mentioned like if there's not any recent sales, you're going to look at supply and demand. And sometimes there's a lot of supply, let's say, but some of that supply is like, they're like grossly overpriced, or there's clearly no real motivation. So like throwing a property up on the market way overpriced just to see if you get that. Do you take that into consideration when you're kind of valuing the supply and demand? If you get my question, hopefully.
Oh, here.
We take listings with a grain of salt, right? As we should. We don't take them too seriously. However, for example, there's a building that we're doing a lot of appraisals in Langley right now. It's an apartment complex. I won't say the address. There were pre-sales bought in 2018. Everyone is trying to sell right now. So in the apartment of 200 units, you have about 50 for sale. So a quarter of the complex is for sale. And not all of them are real listings, but probably half of them are. And you can see how long they've been on the market for. If there have been price reductions, you can tell that this is real supply. People really want to get out of this sale because they need to do something else with their money. They have a sick person in their family. They need to pay for their child's college, whatever the case may be. So there are, if you sift through all the listings and all the supply, you can find some good quality listings in there. And yeah, we do know the ones that are overshooting. It doesn't mean anything, but if it's listed below market for an extended period of time, 20 or 30 days, that seems like a legitimate listing in our eyes, and we would consider it. We wouldn't be able to value something much higher above those listings because it's just a very contradictory story. And even though you and I might say, oh, it's not a real listing, and they're just fishing or whatever, they're just they're campers and they're not motivated sellers. The banks aren't going to necessarily believe that story. We have to kind of look at it from all angles. And I hope, does that answer your question?
Yeah, it's just the same as the listings that go on trying to get multiple offers way under price and then don't get them 10 days later. They're now $100,000 more on the market because they didn't get their price. Yeah. Okay. I'm just wondering if we got into.
So there's another.
That's the beauty of any market, whether it's corn, coffee, bananas, or real estate, is that this supply and demand thing. I mean, some of it's legitimate, some of it's not, but it's all real, and it all needs to be taken into account. But yeah, it's the sales, it's the concrete sales that happen on MLS where everything, the subjects are removed. That's the real meat and potatoes of appraisal, and the listings are just kind of on the back burner to keep an eye on.
We always get the question on the other side. Well, my neighbor's on the market for $1.2 million. That means mine's worth that much. Like, it hasn't sold for that yet, so we need to look at the sale. Okay, cool.
Exactly. Yeah.
Jeanette's got a question here. It says, if a client accesses a deferral, are they at risk later in terms of a refinance from either a declining credit score, or are they forced to refinance with the same lender, which could raise their rates as they can't shop the competition? Which is an awesome question. So the payment deferral for whatever period is approved, what occurs is the amount is added to the principal balance. So instead of the client being in arrears and that tagging to their credit bureau and decreasing their score, it means the balance is just increased. And they essentially, because the term does not get extended, therefore increase their overall amortization. So we saw this about 20 years ago. We had the big transit strike, and then we had a big teacher strike, and it's the only thing comparable that I've seen where the banks are doing the same thing. So they're basically taking those payments and adding that on to the overall principal balance. So it extends the amortization. But again, if you're borrowing off of a line of credit to make those payments, that line of credit is probably at a higher interest rate and compounding monthly. So therefore, what that also means is that there isn't sort of a separate deferral account that you would have to pay out if you wanted to switch to another lender, which is good because then it doesn't strong arm you into staying with that specific lender. Now, I haven't had a scenario where we've had somebody with a private lender try and access any sort of payment deferral. And with the small private lenders, they get to decide how they do all of their business. So there's no set plan, but I know with the major banks, that's what they do. They essentially increase the principal balance. There's no hurt to their credit rating. So again, if your payment's coming out in the next week and you need the deferral, access that if it's available to you. Draw from a line if you need to make that payment and protect your credit in the short term. But it should therefore allow you at any opportunity to switch to another lender. Yeah. Does anyone have any other questions? We're just 9 minutes away for 10 o'clock, and I don't want to keep anyone over time, but does anyone have anything else that they could think of that that we've chatted about? Or I can unmute everyone and anyone else that's in here. I know there's other people on the call that deal in our real estate world that I see on here too. So if anyone else wanted to share a little bit, we've got a few minutes left. Come on, Linda. I know you're not shy of media. What are you seeing, Linda? Maybe introduce yourself if you'd like and share a little bit about what you're seeing.
Thanks, Katie. Hi, everyone. I'm with Out of Chaos. We have a move management service and home organizing, but more in particular to this conversation is around the move management side of things. So the difficulty we're finding is, we're not finding clients who are waking up today, say they want to sell their homes. Everyone is quite leery. It's those people who are currently in the funnel right now where their homes are listed, or people who have already sold pending possession date on a relinquishment in the next 3 weeks to a month or so. Those are the clients who are typically older clients or perhaps senior who are in downsizing mode, and those individuals are not physically capable or willing to do their packing. So where we come into play is the whole packing, unpacking and setup and the move management side of things. And the difficulty we're finding is around those safety measures. As we all know, those depletable resources such as your mask and your hand sanitizers and all of that, they're harder and harder, if not at this stage impossible to find a replenishing site for. Mm-hmm. So our challenge is, as we move forward, is going into a home. Our services are inbound, so it's not as if we can do a drive-by, it's not a virtual session that we can do. So it's getting the team in, maintaining social distancing, and there's always the concern amongst my staff. I have 10 employees, so the staff are concerned around not only their safety in terms of the asymptomatic side of things. So it's one thing to have gloves on, to have mask on, hand sanitizer and all that. You don't know what you're walking into inside of a home. The homeowner is asymptomatic where the virus is present, not to mention you've got a team of people coming into a homeowner's home. What are you leaving behind? So those are always unanswered questions and concerns that what we're dealing with right now.
Awesome.
We're also noticing, like I had a couple of possessions last week where either a buyer or seller was giving up their home, but you almost have to be extra prepared. Like you have to contact your mover and double check and go over. And one guy was really frustrated because he's like, why can't, like, he didn't set up his Shaw and he's calling me the realtor to be, and not even his realtor. And he's like, well, you never told me which providers. And it's, so I think it's, and it's the same with cleaners. Like the cleaner I go to all the time right now is not working. So it's finding people that are still working and figuring out like if it's okay. But I know from our end, we're just doing our best to ask as many questions and trying to make sure that they can be looked after. But yeah, everyone's slower, taking more time, and then getting really frustrated a lot easier. At least that's what I'm noticing with like the current moves.
Yeah, sure. And then that's the biggest thing we're finding right now is not only the impact on us, safety measures and otherwise, it's all the auxiliary services. I call it it's the exit strategy in terms of all the possessions. Specifically in a downsized environment. Right now, big brothers aren't picking up all of those places where everyone is homebound now trying to do spring cleaning, but there is nowhere that is accepting any of your goods. So our impacts on charities, consignment houses, as well as auction houses, there's a huge impact. So being in contact with those service providers on reduced services or even just closed, period, with really no end-to-end solution. And then the other side is around the senior care home. So with seniors who perhaps are on a wait list getting into a senior residence, no one's accepting. That more and more senior care homes now are not accepting new residents right now. And whether it's not just in full care, you have assisted living, and then there's also the senior residences, 55 and above, which are totally independent. That door is kind of closed right now temporarily until, as we all know, it's a grave situation in all senior homes right now. So that sort of end-to-end solution is getting impacted, which is obviously slowing down the move. And people are sometimes they're sort of in a stalemate right now.
Mm-hmm. Anyone else? I know here, I'm going to unmute Clint. Clint's here. Clint Grayson. Can you hear me? Oh, no, he's muted. Clint. I don't know if he can hear us.
Like
I'll unmute him.
Oh, there he is.
Is he on there? Oh, he's still muted, I think. That's okay. We're just a couple minutes here before 10 o'clock, and I know everyone's got back-to-back Zoom calls these days, so I don't want to keep anyone any longer than is necessary. But thank you, everybody, for joining us. Obviously, what we've all talked about today could change in the next half hour. But what I recommend, if there is anyone on the call that you want to be connected with, we're obviously all available, all professionals, and eager to help. It's the only thing we can do at this point in time is offer of who we are and what we know and what we do as a skill set to help everybody during this time. So if anyone wants or needs any of those contacts, please do let me know, or shoot your message into the chat box here while everyone's still in here. And if anyone has any other questions, now is your chance. Otherwise, we will let everyone off the call and start our day.
Thanks, Katie.
Bye.
Okay.
Bye.
Thank
Bye,
you.
everyone. Thank you.